Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Thursday, the 2nd of February, 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning is mixed to risk averse, selling on the equity side. The leader this morning is gold, trading at 1225. $1,225 on the April contract, followed by the yen, bond, bund, euro, and then crude oil. So you can see that the market is moving its assets to safety a little bit here. Of course, we're talking about the market as if it's one thing, but it is a collective. Other than that, the news overnight really centers around the fact that the Fed remained unchanged and that they believe that the labor market remains solid and inflation is still below its 2% target. The Bank of England announced today that it's growing more concerned about inflation. It held its key interest rates and asset purchase program unchanged at 0.25 and 435 billion pounds. Some members raised concerns about accelerating inflation. The pound is unchanged or a little bit changed. It's trading at $1.2650 against the US. And also, of course, the UK moved closer to Brexit, with the Parliament voting 498 to 114 to move along with the European Union notification of withdrawal bill, which allows once passed, it allows the Prime Minister May to trigger Article 50, which gives the UK 2 years to disconnect from the euro. Other than that, Facebook came out with just absolutely big earnings leap. Its revenue number increased 51%, 51% to $8.81 billion. That was a big move on them. And then, of course, this morning we got initial claims at 246 versus 250, which is better. Continuing claims 2.06 in line with expectations. And then we also had preliminary non-farm productivity a 1.3% versus 1.0. So overall, pretty strong numbers this morning. However, the market is really heavy. Looking at what we've got going forward, at 10:30 we have Nat Gas expecting negative 77, and then as far as speakers, we're looking for ECB's Prate at noon Eastern and ECB Speaker Kerr at 1:45, and then after the market we get Visa and Amazon earnings. Okay, so that's the rundown. That took about 4 minutes. Let's move on to what was expected yesterday versus what we got. This is a daily review as opposed to just coming up with plans and moving on and pretending like they never happened. We just go over it every day just to make sure that we're comparing our expectations with what the market gave us and adjusting accordingly if necessary. The primary hypothesis yesterday was built on the fact that we're opening in a gap up above the last 2 days. These last 2 days here make up one composite because they're overlapping each other. So you can see the gray areas are inside of each other. So I built a composite there. I didn't do it before the TB, but as soon as we were over, I put the composite up, and that gave me a level up here at 89 and 89 even. We'll talk about that in a minute. That was a poor miss by me on the video. But the expectation from what we've seen in the past is that the market will chop around on the open auction, rotate down, leave a gap, and then start to shift up. And then the target would have been 22.89. Did I say 89 earlier? I meant 68. Anyway, I'll get to it. And then so that's the primary hypothesis that did not happen. That's a big X there. And then a secondary plan, like I tweeted about yesterday, it leaves us with hypo 2, which is to move up on the open, rotate back down, and then hold and just stay sideways into the close. and just basically test the prior day's high, but remain above it and stay in the gap zone. The gap zone was here. It was removed because we traded through it. Um, that was hypo 2. Hypo 2 did not work. And then hypo 3 was to test up, open auction, test up, and then start to shift down, bounce on the prior day's high, and then start to move into the prior day's high with the first target being the overnight low at 2274.75 on the ES. And then, of course, it's hard to say what it's going to do next, but it did move down into the MC point of control, and I'll show you that in a minute. Here's what really happened. So you had your move up on the open to 85, rotation down. There's the little bounce on the prior day's high, very, very small, just 2 points, 9 ticks basically, and then it pushes right into the prior day's range and is unable to go out of it. So just looking on the short side, the target being the prior day's point of control in this case. Once it's inside of value that I'm looking for the point of control to be tested, 2267, we stopped 5 ticks short of that. And what came before that is this. So here's the 2-day profile, this yellow profile right here. And you could see the point of control, and I posted this yesterday afternoon. The point of control is right there, the black line, and that black line is 2268. The market pulled back to 68 and a quarter. Let's zoom into that a little bit. So you can see here we moved to 2268 and a quarter and just could not, a very clear taper in the profile. So as the prices went down, there was less and less interest. This is what it's showing after the fact, of course. There was less and less interest in these prices as the market pushed down. And we could see that also in the order flow that as much as it was hammering on the downside, it wasn't doing it wasn't making much progress on the downside. And then we get a bounce. We miss the MC point of control. Again, the MC is made up of, the microcomposite is made up of the volume of these 2 days. And I got several questions about, well, what is this microcomposite thing, and when do you know how to create it? Essentially, what a microcomposite is giving us the ability to see when the market's in balance. So when do we know the market's in balance? It's basically chopping and it's trading inside of itself. So the day before it dropped down to 63 quarter, then it rallied, and then the day after that it traded inside of that range. Once these two trade inside of these ranges, yes, I can look at the profiles of each individual day, but these overlap, and I want to see what the 2 days accomplished. Remember, we're looking by building an MC. What we're doing is we're taking a peek at where a higher time frame player or where higher time frame players have interacted with the market. So we're combining these so we can get a more complete profile, complete picture of the 2 days. And that's what gives us the 68. Now, I'm not saying this is a magic bullet and it always works and so on, but remember the last MC right here is what, 2264 and a half. It moved up to 2264.65 even, then it moved back. And if you look back, look at how often we've just pushed through the 65 and then traded above it, then pulled back and pushed through it. You know, it's not intended to be used. The points of control or the high volume nodes are not intended to be used as a level. Hey, it's a line in the sand. Yes, it worked here, but I'm going to tell you that this is not the expectation. However, what it tells us is this is where the market was efficient, right? The market, when it's efficient, it facilitates trade a lot, and it creates an opportunity for a lot of people to buy or sell. And now the market's doing its real job, what it was created for. And so these prices, the high volume nodes like this one right here, and especially the point of control, which is the highest volume price of the day, these represent efficiency. And that's really what we're looking at here. And so it's very important to monitor how these are moving. So I always monitor how the point of control is moving. You could see yesterday it moved up and it started to, it looked like we're building a base here. We're likely to push, this is the primary hypothesis, is that we're likely to push towards that low, not take it out today, balance, and then start to work our way back up. Just so you have an idea. So that's the review of yesterday. It's more than I wanted to share really, but just so we have a clear view. Actually, that's not what I wanted. Just so we have a clear view of what kind of a market we're in. I don't trade off of the day time frame, but it's important to look back and see what the market has created, right? So the market has pushed up and it has failed to hold these lower prices every time. There's an excess every time we move down into the 2250 area, especially recently here. We've had an excess and the market pushes back up, and it's, there's nothing here that tells me that this market is signaling, sell short. You can always try to sell the top and continue to do that. Many have over the last, 9 years. It's not particularly profitable, and if it is, it does so for a short period of time. But overall, the market still, has done nothing over the last 3 days but to pull back to the MC point of control right here and to base off of it. There's not much more happening here. As you probably already heard, the month of January was the first month in 25 years or so, statistically, that has gone every day without a 1.5%, with more than a 1% move or something like that. So it's not really accomplishing much, is the point that I'm making. Now, I like to look at the weekly. Again, I don't trade off of these high time frames. I don't intend to add confusion, but my job primarily is to monitor the auction. This is why I'm not sitting here telling you, here's my gray zone that you sell, here's my blue zone that you buy, and here's where you do a flippy dip trade or whatever. I'm not interested in giving you that. I'm not interested in talking about that. What I'm interested in doing is helping you see the market. They see the bigger picture so you can formulate your own plan. And that's really important to me because once you know that, once you can see the context and can use the the way the market is organized, the way the auction is organized, then you have the power, the knowledge to go and build whatever plan you want. So if we look at the what we've accomplished here this week, the gold is Monday, the purple is Tuesday, the red is yesterday, Wednesday, and you can see that it's overlapping itself. The gold is has actually, I can split this for you. You can see here the gold is, it dipped and it pushed higher, and then Tuesday showed us somewhat of a bearish, kind of a short-term bearish view, potential for staying below the 66 area, 65 area, but it ended up rallying on the close, canceling what we did on Monday. And then yesterday, it just put in a higher high, higher low, moved the point of control higher, and closed the gap. The gap was right here. You could see this gap right there. Closed the gap right up to the high of the gap. So if I extend this out, we pushed through the gap high by a couple of ticks before it started to sell off. And it ended up closing higher yesterday. So even though it looks pretty bearish in the overnight session, the overall market stance is still it's still looking to explore higher prices, is my point. It's continuing to examine higher prices and hold higher prices. And that's what we've accomplished this week. So when we compress this into a profile, we can see that it's just, it's just balancing down here. This is considered an excess right here. This is the initial test of the gap zone has failed and is pushing lower. And so short term, the market is likely to build in here. Now, what do we have ahead of us that might move us? Well, tomorrow we have non-farm payrolls, the second most important release of the month. Non-farm payrolls at 7:30 Central, 8:30 Eastern, and that may shake things up, although the last few months it hasn't done anything. So just, Even though I don't trade the weekly or the daily time frame, just keep an eye on what the market is doing in general. We don't want to get caught up, zoomed in too tightly, and not have an understanding of when things are brewing that would cause a trending day type move. And that's why I look back. The overnight session has done nothing but sell off. It sold off immediately on the open of Asia, and it continued to hold lower prices. It mounted an attempt at a rally into the European session over here, but overall we're staying right against the mid, right on the low end of yesterday's range. It's looking kind of heavy. It's putting a bit of a twist to my hypos that I prepared last night. It's just it makes it a little more difficult to determine what we're likely to do here. So 2270.50, and you can see the profile is a somewhat of a long liquidation profile or a B-shaped profile where the market moved immediately down and then held prices lower. This is called long liquidation. The overall inventory in price is short. The market is short in price, but in delta, it's completely flat to slightly positive. Again, another thing that's likely to cause some turbulence on the open because there's just not enough clarity here as to what it's trying to do. So when we look at the levels around us, there's really not much we can work off of this morning. So this morning, I'm looking for hypo 1. Let me compress this a little bit here. I'm looking for hypo 1 to be an open auction, pretty noisy. I'm looking for this to test the lows of yesterday, and I'm looking for again, like I've shown over the last few days, a higher low corrective move for a rotation through the 2278 area. And once it takes that out, it's likely to push into this high volume node from yesterday. That's hypo 1. Oops. So down, test through yesterday to 67, and then go corrective and then push back up. That is the primary hypo. Okay. Secondary hypo, we push higher first to 74, attempt to get through the 78, find sellers, and push down and then start to move back towards what? Towards the 2264.50 MC point of control. Okay, I'm not expecting a trend today. The market hasn't consolidated enough, in my opinion, but we'll see what happens. Anyway, I'll leave you with that. I got to run. Just keep your risk tight. Wait for the market. There's nothing really urging you to put on a trade and sacrifice your money on a lack of edge. Just take your time and wait for the market to say what it wants to do, and then hop in. Set your risk and then let it do what it needs to do. Okay, good luck, and I'll catch you later. Stage 5 traders, we have our AMA at noon Central, 1 Eastern today. The invites have already gone out. Take care.